All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We're looking at a market that's had a little bit of a downside bias to it today due to the real drop in oil and some of the weakness in some of the banks. But it's not been a major type of downside day. We might get continuation and follow through here. Let's go take a look at a couple charts. I'll start here at SPM with the JKS. And JKS had beautiful signals yesterday. Welcome to solar. But JKS here does have Harami action, right? We have a Harami. Now, in dealing with Harami, you're dealing with several things. Even amongst technical traders, there is some argument of whether this is a bullish or a bearish Harami. Okay. In fact, most literature will actually call this a bearish Harami. Okay, this inside day essentially of yesterday's candle and say it has downside implications. But the thing is, with this type of Harami, most of the time that's happening after a real short-term overbought condition built on the hourlies and some of the other shorter term charts. And so you can see Haramis that basically get gaps up and continue on higher. Now, obviously, when they go down, they're bearish Haramis, right? In general. In general, with this type of Harami, whether it be 2013 or 2009, whatever the year might be, okay, you basically take the open price and the close price. Whichever way it resolves from that, that's kind of your breakout. That's kind of your telling you, all right, your Harami's bullish or bearish here. And so the nature of the Harami is to kind of, in many ways, indicate some consolidation and a breakdown below yesterday's lows would be quite bearish. Okay. Now in 2013, and we've seen a lot of these resolve themselves to the upside. Generally, with this type of Harami, I would prefer to play it on the bullish side, but occasionally I'll go the other way. Yeah, SPM like three black crows ending up being bullish. Yeah, oh, absolutely. It's been a time. It's been very interesting. Yeah, take a look at something like U.S. Steel here. Okay, and I show you something like this just to show you the low volume and that it's difficult whenever you're doing any sort of candle analysis to say, you know what, U.S. Steel is likely to go higher or lower because of today's action. Okay, it's kind of ridiculous to say, even with the change in the indicators. Okay, simply because the complete lack of volume the last 2 days. Okay? I mean, you add up the last 2 days here on U.S. Steel, you kind of have a Harami action, right? But no volume, and when that happens, you almost have to look back. What were the last signals? Okay, what were the last signals? Were they bullish, bearish, and really go off of them instead of off of any new signal that you might be seeing here today. Here's Alcoa. Okay, and one of you emailed me and you want to short Alcoa. And shorting Alcoa here, we're talking about something that's really increased in volatility since it came out of the Dow. Okay, some of the volatility has really risen. That average true range that I showed you earlier, okay, the ATR, look at that rising here for Alcoa. Since they got kicked out of the Dow, that range is just rising dramatically. Okay. And so you're dealing with something that is much more volatile than history states. Excuse me. The last 2 days, very little volume. Where's your risk reward if you're trying to short this? Well, you're looking for it to come back down into the 840, 860 area. You know, your best stop area, maybe yesterday's high or the 7-day moving average. It's not the greatest risk reward setup overall that we see out there. But you know, probability, you're probably going lower here with Alcoa with the gap and go that it had last week. But difficult to play from a risk reward standpoint here with Alcoa. Caterpillar. Okay. Now we've talked Caterpillar. Gap down on the earnings, bad news. We talked, hey, normally with such erosion in their business, we would see this stock fall. But there's a problem for the Bears. That is, Caterpillar has a huge stock buyback in the works and going on right now. Do they use their money and come in and defend the stock and keep it from a post earnings slide? And so far, they've done that very successfully. Okay, very successfully. So there's a couple things. Okay, if you're wanting to short Caterpillar, I'd be looking for one of two things. I'd be looking for a breakout to the upside that reverses. Okay, so you get a little false breakout. So something up here at about 85 and then break back below 84. Or I'd be looking for some sort of gap. Okay, gap down to 83. And if I were to short that gap, I wouldn't walk away. I wouldn't get out of the room. I wouldn't leave the trade. Why? Because if it gaps down to 83, yes, that would be a very bearish gap. And you're probably coming down to 82 from a normal technical standpoint. But with that stock buyback, do they defend it here at 83? So I'd want to see that. If you start to see buy orders come in that are pretty big, you know, okay. Uh, yeah, I shorted it. Let me pop out of here real quick and leave it alone. Okay. So those are one of the two scenarios that I would be looking for to set up there on Caterpillar. Okay. All right, Capital One, and I believe GT. You asked what I made out of the most recent move in Capital One. And nothing. I mean, absolutely nothing. Talk about no volume, no action. 20 cents higher, 20 cents lower, not a big deal. There is a normal range on stocks, but even if you look, Capital One normally has a dollar range every day, right? That's its average true range. We're not even close to that the last 2 days in moving. In fact, for Capital One, a 10-cent move in the last 2 days, looks pretty big. We have a little bear flag action going on here. Okay, to see this gap down and go would be the normal resolution. We start to trade above 50. I get very nervous that we might have abnormal resolution, which is what we've seen on a lot of bearish trades this year. But yeah, we'll kind of play that again. No change in how we'll play that with the 70 mark. You asked about the KRE and if this would be a good place to be a buyer of KRE. And after this big uptick, we talked about, waiting for a retracement, waiting for a little downdraft. It's now here. Okay. And if we come into the hourly chart, as we come down to the lower Bollinger Band, that's kind of the support area. For those of you wanting to buy the dip and play in the bullish KRE story, some of the potential changes, it's set up very nicely here to buy here at 37.5. Okay. What's the danger? Okay. What is the danger of buying here? Why would I'm talking about it, but I'm not going out and aggressively buying it here. Why? Well, because a lot of times what you can see on these types of moves, you get the 2-day pullback, then you get a 1 or 2-day uptick following by that third leg lower. Okay, so you actually have some sort of ABC like correction. Do we see that? Does that come in? It's options expiration, no volume. Is there a catalyst? There's more here to tell me it's not ready to move anywhere than to say, hey, this is ready to move up right here, right now. Could Bernanke shift that into the close today? Or today, later today? Yeah, he might. But overall, when I look at 90% of the stocks out there, it's not is this going up or down? It's is it going to move? Is it going to move? And right now, we're kind of in that position. Yeah, Dominion here. Dominion volumes are bullish. The trend overall is bullish. It's held up very nicely even with interest rates on the rise. Okay, you have kind of a dark cloud candle followed by a bullish hammer, so you have a mixture of candle signals in here. You have a little resistance from the upper Bollinger Band, but it's managed to sit up there now for 5 or 6 days. Um, no volume today, so nothing really to take out of the volume here. Basically, if I'm in Dominion on the upside, I'm throwing a stop at 65 and saying, you know what, we start to go below, 65.20 or 64.80, depending on how tight you want your stop. That's kind of where I'd play it and put a stop and still look to ride that overall, to the upside. It's outperforming the utility sector. It's bucking some of the trends with interest rates. It's and Dominion doesn't trade like a true utility. There's probably something coming up with its dividend, helping it a little bit too. But definitely nothing I would short right here, and I'd probably use 64.80 as a stop point for it. Gold, okay, GLD. Look, as the dollar keeps going up, gold keeps going down, and that's not going to shift unless we see dollar to dollar drop. Could Bernanke shift that with some of his comments? What's he going to be talking about? Well, you can kind of come see that here at Bloomberg, okay, and in the economic calendar, okay. And excuse me, Bernanke speaks tomorrow. You have Lockhart speaking today, and he just came out. Bernanke speaking tomorrow. My apologies. But either way, anytime any of these Fed officials speak, any one of them can move things. But most of the time, they're not there to speak about interest rate policy. Okay, you know, Bernanke speaking at a town hall meeting with educators in Washington. So he's not exactly speaking to the markets, right? Okay. Here's Janet Yellen. Okay, this is her confirmation hearing. This is in front of the Committee of Banking, Housing, and Urban Affairs. This might be a big deal, right? This might be a big deal here with Janet Yellen. Okay. In fact, probably much more of a big deal than Bernanke on Wednesday. So for those of you looking for gold and think gold's going to hold support here, we'll see what happens around the Bernanke and Yellen action and see if we see some buying. But gold's had every reason to go up 2 weeks ago and turned and went the other way. Doesn't bode too well for it in the short term. Okay. Yeah, Jay, I did mention yesterday take six doubles. Yep. And I was absolutely wrong on that. And I've talked about that 100 times as far as how many doubles it takes. And I got to six, but it's only five. It's actually between 5 and 6 if you look at it technically. Um, if I bring it up here, you talk the challenge. How many doubles do you need to get to 100,000? Well, okay, you start with 3,000. Okay, you go to 6,000 on the first double. You go to 12,000 on the next double. Well, one of the things I do with the challenge is I pull out 3,000, right? So really here we're at 9,000. Okay, so the next one we get to 18,000. Then we get to 36,000. Somewhere around 40 grand, I pull out 10 grand. Okay. So, even if you just go straight double from here, any way you slice it, you're between 5 and 6 there. Okay. Yeah, good question. Question about trade allocations and the challenge. When you get up to 20K, how much do you put into each trade? Do you have a percentage of bankroll that you use? Yeah, in one of the things for those of you that want to see how I trade a successful challenge, um, the last one you look at the results, it wasn't successful. Uh, very few trades relative to a successful challenge. If you come in here to traderminute.wordpress.com, okay, and the data is not laid out as nice or anything like that, but it has all the trades in here. that you can kind of go back. You can see the posts and everything else. Um, so it's one place if you want to get a feel for where that was. But generally in 2 or 3 trades at a time, and generally much more aggressive. Meaning, when I have gains, we get to 20K, I'll put 10 grand into a trade and then 5 grand into another type of a thing, and hold 5 grand in cash. I keep a cash reserve, and generally once we start to get even over about 8,000, I'll put about 50% into each trade. 50 into one, and then another one with about 25%. And that way, hey, if the situation warrants where I need to put another 25% into another trade to have 3 trades, I can do it and leave that open. Another thing that I will do as the challenge goes and as we grow in gains is I will actually go out and take a call play and a put play. I'll go do one or the other. I'll buy a call on something. I'll buy a put on something. If one starts to go the other way, I'll pull it off real quick, ride the other one. I'm much more inclined to do those types of things as the earnings grow, and you'll find the aggression level rises, but not so much because of the earnings, but it's because to get those earnings, the trading overall is on an uptick. Trading is getting hot. It's kind of in a better groove. When I'm on a down streak, right? The last thing I want to be doing is getting fancy with it or getting extra aggressive, because that's how I blow things up, and don't want uh, to do that. Yeah, NASCAR. Are Carl's top 3 his trades from today or ideas for getting in today? Yeah, Carl's top 3 are just basically 3 charts that are setting up. But in fact, today, and he talked about this, there weren't a whole lot of triggers. So, you have Pandora, right? Which very bullish action from the bullish consolidation here. All signs point to a major breakout. Stochastics, MACD. I mean, it's a picture perfect upside chart, but doesn't quite have the trend rider signal as it hasn't pierced that upper band. Okay, so getting in tomorrow morning as it opens above 28, would set up very nicely. GameStop was another one. He's like, I love the setup here. We're in a consolidation. We don't have quite the breakout yet, so it just maybe a little premature, but one that has tremendous breakout potential to it. And then Red Hat, which, Carl's been watching all day, and we've talked about it several times, and he's like, this has the trend rider bull signal, but we're talking about a stock that's down. Red Hat can fly, it can move a lot, but it's also one that tends to give trend rider signals and then pull back a little bit. So it's really one that hey, if it pulls back a little bit, comes back towards the 7, may give a really nice entry. And so without there being so many triggers, uh, they're ones that are close, but no cigars just yet on those. Okay. Yep, no problem, NASCAR. That's what we're here for. No problem. All righty. Well, in about, here after the bell here today, Carl will continue with the Education Week. I'll be back with you tomorrow with Education Week, talking about picking stocks and different things that are out there. But Carl's going to delve deeper into options, into some of the Greeks, some of the pricing with options here for Education Week, and those will be also recorded, and you'll see the past 2 classes already in there. Other than that, market probably not going to have a lot of movement in it overnight. Just not a lot of catalyst overall. Okay, it is pretty range bound. We may see a few triggers in the morning, and I suspect that if we do, we'll see kind of either some of the upside on the Red Hat, GameStop, and Pandora, or some of that potential downside in the energy group. Some of these energy stocks, we see a little bit of a gap down tomorrow. They could be in for a world of hurt tomorrow. Even something like a Baidu, there are some stocks that are very fragile as far as on support areas that we've looked at today. If we see those, we'll go and jump at them. Yeah. How would I trade December 28 calls on Pandora? Let's take a look here. So we got the calls, and obviously it's Pandora. These calls are expensive. I talked about a time and a place for bull call spreads. For those of you that like spreads, Pandora is one of those that you can probably, it may be better to do that. If you're just talking about the straight December 28 options, you're not having to deal with a lot of time decay over the next 5 to 7 days. And if Pandora is going to break out, you're looking for it to go now. Okay. So basically, with those, I would look at today's low. We break today's low of 27.05 out. Okay. Out of Pandora. So you have about $1 risk there. Looking at the delta on these, you're probably talking about Pandora going down to maybe about $2 if the stock drops by $1. So, you're buying in for 265. You're probably cashing out around $2 if it goes against you. If it goes for you from a price target standpoint, the initial price target on this type of a chart pattern, you're looking at about $4 higher, so about $32 on Pandora. That's just the consolidation range to just do a real generic price target. But it would be in a trend rider signal with a stock that doesn't pay too much attention to technical price targets, right? So, so with Pandora, I just kind of ride that with the upper Bollinger Band. Okay. Yeah, SPM. You'd like to think that Tesoro will fill the candle, the wick there. Yeah, I mean, Tesoro has a history of that. Tesoro is very, very much like that. The last big trade that I had it with Tesoro was back on that challenge that I showed you over here or over at the WordPress Trader Minute. I'm trying to enlarge my chart here, show you, and it was during this uptick right here. Okay, and I mean Tesoro, it seemingly never closed on its highs. Just always had a 50 cent to 80 cent wick on it, through this run, and it was a great trade for us. And heck, we didn't even ride half of it. But Tesoro's going to be extremely volatile, and the one thing I'm concerned about with Tesoro, if I had calls on it right now, there's no way I would get out of them. As long as it closes in the upper band on Tesoro, you run with it. But there's a part of me that's kind of for, would love to see it pull back to 50 and then move higher. And I doubt that we'll get that. I doubt that we'll get that. Okay. In fact, if you break Tesoro down, the one thing, it's still, yes, it's pulled back and it has a wick on it, but the trend is still very bullish, and it's not really breaking down below the 7 or the 20-hour moving averages at all there. So it's still a very bullish trend. Yeah, a target on GameStop here, which some of this move is really fundamental. It's very difficult to put a top price target on it from a technical standpoint. A lot of times when you're looking at a consolidation, just a very generic uh, measurement is to take, hey, what's the lows of the consolidation, the highs of the consolidation, gives you what, $3, $4. That's about what you expect the breakout to be. That's a very crude calculation, and most technical targets are very suspect. Okay, they are very suspect. So with something like GameStop, look, as long as it stays above the 7, you could ride it on higher. You look at some of the major trends, like back here in June. There's ups and there's downs, ups and downs. As long as it stays above the 7, the stock tends to continue higher. Once it starts breaking down, you see more of a consolidation phase. Now, it doesn't always work exactly with the 7 or something like that, but it's generally a good mark to use to ride a trade. More so with the upside than the downside. Yeah, Tesoro charging into the close. Yeah, up a little bit higher. So, absolutely. All right. Thanks for hopping on. Have a great night, and we will talk to you again in the morning. Take care.